trade October week 3 already. Yeah, we're getting into monthly OPEX next week already for October. This is a chart of ES, 5-minute chart of ES, and here's where we closed along with the S&P 500 on Friday. And after they reopened post lockup, actually we closed down here. Post lockup, look what happened. We popped up and we traded all the way up to 34.80 on ES. That you add the spread, it's when we get up high, the spread kind of dwindles down to around 8.5 to 9 points, and when we're selling off, it seems to go 10 to 11 points. So even if it's just 9 points, this would get us up at about 34.89 S&P 500, and this is a level that will have to be resolved at some point. So even if we open a little weak on Monday, you know the pattern of coming back at the end of the day and finishing on the high. This is a level that will get resolved one way or another. So there is going to be a time soon where we at least print this 34.89 on the S&P. But the way things are looking, it really seems like they're going to try and go after 3,500 next week anyway. So this is sort of leading the way there. Okay, here is our weekly chart of the S&P 500, and we were looking at this 34.28 to be our support resistance point to break out of. And as you can see, we nearly doubled up the week once we got through this level. This level is important because when you look to the left here, you see there were these 2 weeks in a row in September where we came up and sort of blatantly failed below this level, and as well as this first week of September where we closed just under it. So we've only had 2 weekly closes above this level, the last week of August and this second week of October. So that's kind of interesting. We want to see a pattern of continuing to hold weekly closes above 34.28. Here is our simplified daily chart. You can see what has been going on. This week we had the 10-day crossing up through the 20-day, causing a breakout, causing a buy signal. And you can see when you look at the candles just above where this cross occurred, we had a big, bullish day. I guess this overrode the negativity of what we saw on Tuesday of this week when we got up to a new high for the week, and then we got a tweet from Trump that he was pulling back on any kind of negotiations over stimulus until after the election. And of course, what happened is we sold off 77 points that day and closed just off of the low. We had closed below the 50-day. We had closed below the previous day's low. It really looked like the start of a big sell-off that was probably going to take us all the way down here to the bottom of this bull fork, maybe even break that and test the 100-day simple moving average. But the next day and overnight, they already started walking back those comments, and we opened with this bullish cross that morning, and sure enough, we took off. And then on Friday, this 10-day came up here and crossed up through the 50-day as well. So we have these sort of 3 flying candles that are sort of suspended in midair with big gaps between them. And those gaps will fill eventually, but there's got to be a catalyst to make that happen. We saw the same behavior here in August leading up to the all-time high, so it seems like we're repeating this pattern. If we at least just go up here to the median line of this bull fork, that's going to take us to somewhere between 35.16 to 35.41 this week, if this is indeed a target. We know that 35.08 is the weekly all-time closing high. Let's bring back that weekly chart again. The weekly all-time closing high this week here in August, the final week of August. And this was also our only other week that we closed above this 34.28. So maybe the market is telling us we're looking to close above 35.08 this week, or maybe we're going to take a look just above it and then fail to close above that, and that's going to signal that it's time to sell. And maybe that's what's going to happen for week 4 of October to end of the month. So anyway, that's our daily viewpoints. Now let's get into the nitty-gritty of our roadmap. Okay, here is that 34.28 area, and then I added to this on the daily time frame here this 34.31.56 because that was our high here on Tuesday that we failed from. So you can look to the left here and you can see on a daily time frame how this was resistance here and here and here and here. We just barely put in a close, and then if you go all the way back into August, you see this gap up and this resistance here, and then finally a breakout over it. So that's your resistance, and now was resistance, now it's support. We've had 2 daily closes above this level, and we've had 2 weekly closes when we factor together that last week of August and this second week of October. And moving ahead, here's our 35.08 level. That is our weekly all-time closing high, and above there you can see there's really nothing to hold us down other than whenever somebody wants to pull the sell button, and get the selling going. Otherwise, we really have no resistance all the way up to 35.64.85. That was the open and the high of day on September 3rd. That was our first, gap down open and meaty day of selling after setting the all-time high. That's overhead gap resistance that leads us up to the all-time closing high and then finally the all-time high. So once we get over 3508, it's anybody's game here. It's anybody's guess of what we're going to do in this area here, this big open area. And once again, when we look at the simple daily chart, we do have the median line of the bull fork, and this is where these things come in and become really helpful. This gives us a possible average area where maybe we will sort of, look above and fail in this area of between 35.16 to 35.41 as the week goes on. That's the level of this rising line, the median of the bull fork. Okay, that's it. Have a great rest of your weekend. As always, good luck and good trading.